Hi everyone, it is Thursday, October 3rd. This is Liam McMahon with a Daily Moving Average video. Going to take a look at some of the price action that we've seen so far this week. Talk a little bit about what we can expect into the end of the week. And spoiler alert, it's not much. And then talk about some of the weekend risks and go from there. So if you would please take a moment to pause the recording and read the risk disclaimer, which should now be on your screen. We'll then get started. Okay. Alright, so we're going to start with pound dollar for a couple of reasons. One, it's the chart that I have up, and two, it's an interesting setup. It's one I've talked about before quite a bit lately, actually. Jump out to the weekly chart. You can see we have spiked up into this significant range resistance here between basically 162.50 and 163.50. And it looks like we're going to get a pretty bearish weekly candle here, all right? We'll see, how the rest of tonight and then Friday's price action plays out. But the way that it's looking right now, could see a very bearish hammer forming here on the pound weekly chart. Daily chart, all right, today's daily candle, very bearish. Strong bearish candle, closed below the recent lows. So I think there's a lot of potential here for a pound dollar reversal. First target of such a reversal would be the 38.2% fib of this recent rally. That's at 157.15. Below there, and really the area that I'll be looking at is 155.44, which is the 50% fib, and also you can see this moving average 200 and 100 are sort of both in that region, so something too good to keep an eye on. Euro dollar, on the other hand, continues to look fairly bullish. All right, I still am looking for 137 for euro. All right, we closed above this consolidation yesterday. All right, we moved higher today. We're up a little bit here higher even after the close. So 137, this recent spike high, and then 138 is my second target. So I am still looking for that. So that means we are likely to continue to see. You are likely to see continued euro pound strength. We are approaching some significant resistance here on euro pound. The 200-day EMA and this channel resistance comes in at about 84.60, and then 84.70 is the 50 and 100-day EMAs roughly. So you want to keep your eye on that level as well. Breakout could mean another boost higher here on euro pound. Longer term, I'm bearish euro pound, but short term and medium term, it does look like it is setting up for a bullish play. Kiwi dollar. All right, continuing to trade in this consolidation. If we go down to the 4-hour chart. Alright, we are still stuck here in this range. I've been stuck here for a while. It does look like we are finding support here at the 50-period EMA. May start to see a push higher here, so that's something you want to keep an eye on. But Kiwi's still stuck. I still like it to the upside. Confirmation would be a 4-hour close above 83.50. Only below 82 negates. Aussie dollar. Okay, Aussie dollar starting to try to break out of this consolidation here after the breakout, but again, it's been pretty dull price action. All right, you can see very tight range, lots of dojis. That's just because of general market uncertainty. If we look at E-minis, we spiked down to close the day on news that there had been a shooting at the U.S. Capitol building. So far as I know, only one person was injured, no fatalities other than the shooter. I don't know the story yet, so I'm not going to speculate, but that did cause some risk-off sentiment into the close. The major level to watch on E-minis remains the same. 100-period EMA and this trend line at about 1668 or so is the huge level. We did, for the first time, manage a daily close below the 50-day EMA. That may prove to be significant. You can see we held the last 3 days above it, finally broke down below it. So we may see Friday sell-off here as some people get out of their longs approaching the weekend. Pound CAD, all right, another potential reversal candidate. Another pair that I very much like to the upside. Here's the monthly chart. If we do see a reversal, and that reversal takes us down to about 164.50 or so, that would be a great buying opportunity on pound CAD. All right, so very much going to keep an eye out on that level for possible longs if we do start to see that pound pullback. Dollar yen. All right, I still continue to think 96 is the next stop for dollar yen. We're taking our time marching down there. And that could be interrupted at any time by news that Congress has reached some sort of deal. So, in terms of sentiment, the dollar has been relatively offered of late. You can see here is the 4-hour chart of the U.S. dollar. Since we broke this trend line here, we've been pretty much going down weaker and weaker. We continue to soften here. The longer that the government shutdown remains, the weaker the dollar is likely to be. You have a hard time believing that the dollar is going to stage any sort of rally while the U.S. government remains shut down and while a debt ceiling deal remains unmade. When we see that Congress has reached a debt ceiling deal, we should see a spike in the dollar. Whether or not that will be anything sustainable remains to be seen. But up until that point, not likely to see any sustained dollar rallies. Real quick look at pound kiwi. All right, still stuck here in this moving average support area, kind of in a fib battle zone, so to speak. Testing. All right, you can see the 618 of that move, and now we are testing the 38.2 of this move. So we'll see how pound kiwi plays out. I continue to ignore pound kiwi. I'm not going to touch it until we play the range. Pound Aussie, I like this one. All right, to the downside. If you can find a setup that you like, I would take it. Looking for around 168.70 or so. All right, so let's talk a little bit about weekend risk. This would not be a weekend where I would carry a lot of positions into the close, regardless of your trading style. I don't know what the odds are that the Congress is going to come to any sort of conclusion over the weekend, but if they do, I would expect some significant gaps across the board. I would be very cautious about holding extensive positions through the weekend. I would be looking to limit my risk pretty significantly here going into the close, especially on dollar pairs and yen pairs. Dollar pairs for obvious reasons. Yen pairs because the yen crosses have been trading as dollar yen has been trading. Euro yen false breakout today as dollar yen fell lower. Euro yen followed it. All right. Aussie yen falling lower. Pound yen very much lower. Actually testing support and a breakdown of this head and shoulders pattern. So that's something to watch. But I would be very cautious on keeping anything extensive over the weekend. I would be very light on Friday, and then see what the weekend and then next week brings. Last one to note, 157.75 would be an excellent opportunity to short pound yen. All right, so if we do see a little bit of a pound correction higher before another leg down, watch 157.75 on pound yen. That is definitely one to keep a very close eye on. All right, I hope that's helpful. I hope you guys have an absolutely terrific weekend if I don't talk to you. Good luck trading. Remember, be careful, and I'll talk to you soon.